Okay, so the website that you're going to use it, Value Research Online. Okay, Value Research Online is one of the best. Okay, and it gives enough information about mutual funds. This is one of my favorite mutual fund. Okay, I've been investing for so many years now. Okay, SBI Small Cap Fund, direct plan. Okay, see, you can see. Okay, let me actually whatever we have discussed, right? I'll recollect here also. SBI Small Cap Fund. Okay, direct plan. So direct is there, indirect is there. This is a direct plan. Okay, and small cap. What does it indicate? Okay, guys, every mutual fund. One more type I missed out. Every mutual fund will be putting their money on different segments. Some mutual funds will be only focusing on the blue chip stocks. Some mutual funds will be putting only on the mid cap, some on small cap, some on micro cap. Some will be there where they will be putting money on both small cap and mid cap. Okay, like that combinations will be there. Okay, so let me go back here. In this case, small cap, SBI small cap. Okay, this is a small cap fund. So by the name itself, what do you think the risk is? Low, medium, high, very high. What do you think the risk level is going to be? Okay, very high. Okay, so small cap is a very high risk levels. Okay, I'm putting the all. Okay, so what is this? Multiple lines are there. One is SBI small cap. Okay, and S&P BSE 250 and equity small cap. So every single mutual fund has a benchmark. Okay, so if this particular small cap fund, can you actually compare this fund with Nifty 50 performance? Nifty 50 is the blue chip companies, list of blue chip. Okay, this is a small cap fund. You cannot compare this performance with the blue chip companies also. We have to compare this one with the small cap fund. Okay, or whichever companies which are coming under, or assume that out of a list of 500 stocks, if I'm taking this particular 50 stocks for creating a mutual fund, out of a list of 500 stocks, if I'm taking 30 to 50 stocks for creating a mutual fund, that 500 stocks will be our benchmark. Correct? That group of 500 will be my benchmark. Okay, a person you are picking a student from a 12th standard. You cannot compare his performance with a 10th standard student. Correct? So you should be only comparing with the group from which he is picked up. Correct? Same way, we are creating a portfolio. This particular SBI small cap is created from a portfolio of BSE 250. BSE 250 is a whole group of stocks from which this particular SBI small cap has been created. So the BSE 250 will be its benchmark. Okay, so here that is the reason why we have the SBI small cap and the S&P BSE 250. Okay, this is green and this is blue. So this is a whole small cap, the huge one. This is 250 small cap. This last one is a whole small cap, huge one. Okay, so if you compare SBI small cap, the blue one, the highest on the top, the blue one. Okay, how is its performance when compared to everybody started here, same place. Okay, everybody started the same place, but as it was moving, okay, as the day or the years passed by, the SBI small cap has been on top. It means that this is a growth that they were having, okay, on top. And then the benchmark 250, BSE 250 is here. That's a huge difference between the benchmark and our fund. It means that when the fund is performing consistently, okay, over and above the benchmark, it means that the fund manager is the major reason why it is performing well. It is performing extraordinarily because it is performing way beyond the expectations on the benchmark. Benchmark is here, whereas this is here. Okay, it means that the performance of that particular fund, okay, is very high, and the major reason is the fund manager. Okay, because the fund manager is the one who is selected from the 250 stocks. He has selected a 30 best stocks, okay, which is fundamentally good. Technically also is growing at a faster pace. And he is seeing that whenever this particular fund is actually, when things go wrong, it goes down only by little. When things go up, it goes up very fast. Okay. And that's the reason, even when things are going down, it is also going down. Okay, see here, it is also going down, no doubt about it. When the fund is whole, market is going down, this is also going down, but not a huge one. Okay, but it's growing at a fast basis. The growth is very fast when compared to the fall. Okay, and that's a major reason why this particular fund has been performing very well. He is his fund manager is R. Srinivasan. Okay, a person who has been managing almost 20 plus years of experience. Okay, and is doing a great job on that. Okay, so here itself, the same SIP calculator. In this particular mutual fund, if you have invested, okay, 1 lakh, how much is the investment so far and what is the return like that? Okay, say for example, okay, maximum is 9 years. Okay, anyway, so this is a small calculation. You can do the same calculation over there. Okay, in the website that we have seen. Okay, portfolio breakdown. Okay, so in this fund, this is a risk level. This fund has very high risk. Okay, small cap fund, like you guys also said. Okay, this fund, you see here, low to moderate, moderate to high, high, very high. This is having a very high risk. Okay, so but still I have invested on it because overall performance in the past 10-15 years, okay, I have seen that it is pretty good, and so I've invested. So the risk level is very, very high on this particular. Okay, hold on. Okay, this level is very high on this particular fund. Okay, weightage. So where all it can be, see, not every single, assume that it is having say 100 crores. Entire 100 crores is not going to be put into the fund. See here, 93.5% has been put into the investment and 6.43 has been kept as cash, idle cash. Why is that a particular mutual fund should have idle cash? Assume 1 lakh people have invested so far. Suddenly, some 10,000 people come and say that I want my money back. I'm having, say, some expenses. Okay, I have to actually have medical expenses or the education expenses. I want my money back. What they will do? They have to actually, these people have to give the money, right? They cannot sell the asset. Okay, they'll sell some position. They'll not be doing that. They always expect some kind of, outgoing will be there. Fund outflow will be there. Okay, based on that, they have kept some idle as cash so that the portfolio should not be affected at any point of time. Okay, that is the reason fund has been kept as cash here. And then market weight. See here, small cap is what the name suggests, but not necessarily that all the money should be kept in small cap. Okay, mid cap companies, 54.54% of the capital has been put on mid cap and small cap. Only thing that you have to understand from this one is, okay, find that the amount of money that has been kept as both mid cap and small cap, the risk is high. The risk is high. That is what you're going to actually understand from this. Okay, and then comparison. This is where peer comparison happens. Okay, so you are going to see when you're going for small cap, right? Okay, I want to actually see this company, but what is the peer companies? Okay, if the peer companies are much better, why you can go for that one itself, right? So for that you have to know the peer companies. That is where here we have. Okay, SBI small cap. Okay, Nippon India small cap, Axis small cap, Kotak, and then ICICI Prudential. Okay, the same thing is going to be open for small cap as well. Okay, let's now finish this. Okay, you can see the peer companies, how the returns are over a period of time with the expense ratio. Okay, so this expense ratio. Okay, what is a SBI small cap expense ratio is 0.74. It means that how much ever you're investing, 0.74% of the capital will be taken by the mutual fund as an expense for managing the fund. Whole fund they are managing it, right? For that they are going to take around 0.74. Arun, you have a question so far?
Nothing. I said for 20 years, 75 lakhs you said, no?
Yep.
An example?
Yes, yes.
But 75 lakhs after 20 years will be much lesser value of that.
Of course, yes.
Even that you should include I think.
See, I'm saying like, if you want to include, right, we are going to include the tax, inflation, okay, value of money at that time. What 100 is 5 years back is not 100 here, 100 today. Okay. If you're going to actually, lot of parameters, all these parameters, tax, inflation, or something like we cannot stop. Right? Whichever we don't have control on, I don't want to even think about much right now. Okay, thinking about it, adding it, okay, fine. We are going to actually have that parameters in place or multiple more parameters as years pass by. Okay, but I will not be able to do anything with those parameters, or I don't have control on those parameters. My only control is that how am I going to actually invest? Okay, select the fund or increase the 5,000 per month to 10,000 per month or 50,000 per month. That is where I have the control. Okay, in whichever mutual funds you go, all these parameters are always going to be there. Okay, keep the constants aside. Keep all these variables which we don't have control on, keep it aside. Adding more is only going to give us a lot of confusion. First, let's not involve that. All these parameters are always there. Tax, no matter what you're going to pay. Inflation, no matter what is going to be rising or falling, whatever it is happening, it's always rising. Okay, most of the time. So all this like value of money, what you can buy for what is 100 rupees previously, you'll not be able to buy for 100 rupees now. You may be able to buy for 200 rupees.
Yeah.
Same thing. That is going to be there. Yeah. So I did not include that because we'll not be able to control on that. We don't have any control on that, how it is going to change, or what if it is like, what 100 today, from 20 years from now, say it is, say 500 or even 800. We don't have control. Okay. Our control, what I want you to focus on is the amount of money that you can save every single month today. Okay. Which is what is under your control. Okay. So that you can actually put maximum amount on the investment part. Yep. Good. Yeah. So let's move on. Yeah. So peer comparison, expense ratio. As I told you, right? Okay. The amount of money that the fund manager is going to get from us is the expense ratio, 0.74 in this case. Okay. Assume that you are putting some money every year, 0.74 will be taken by the fund manager as an expense. Okay. So how to compare it? We'll come back again on that. Just give me 1 minute. Yeah. Okay. So this is what we are seeing, right? Overview. Okay. Let's see the overview first. Yeah. So we were looking at the peers. Now looking at, okay, the minimum fund. So how much fund? What are the details of the fund? Assets. Totally, what is the total asset that these people are having, or this fund is having? 14,044 crores is the total asset that this particular fund is actually managing. Okay. In this fund, we have around 14,044 crores. It means that so many people have invested 500, 5,000, 10,000 like that. And totally, these people are managing around 14,044 crores. Exit load. Okay. 365 days. If you're putting your money and within 1 year, you are trying to actually take your money out, 1% is exit load. 1% of the capital will be taken as an exit load. Okay. 1% is the, like what to say, 1 lakh you're putting. So 1,000 will be cut. Okay. If you're actually trying to withdraw the money within 1 year. Okay. Every single mutual fund has an exit load. Okay. And then minimum investment. Okay. In this particular minimum investment, first starting with 5,000. Yeah. Starting with 5,000. Minimum SIP. Okay. After that, it is 500 rupees. Yeah. First starting is minimum 5,000. And after that, SIP can be 500. Okay. That is what it is. Minimum number of checks, like you should have a minimum of 12 checks. That is not required. Okay. So minimum investment starting is 5,000. After that, minimum SIP is just 500. Okay. That is what we are going to do. As I told you, right? 500 from 500. Some mutual funds, I think it starts with 100 also. Okay. So I would suggest you to go with 500 or minimum 500. Okay. So this is the amount, guys. So don't think, okay, how can I actually put that 500, all these things? Make money. Okay. Put some money aside for putting it here. Okay. So this is the first tab. We have completed the first tab. Okay. So overview is done. Returns. We have returns, and then risk, portfolio, peer, all these things we are going to see. Okay. For one single mutual fund, we are going to see various tabs in order to understand the mutual fund completely. Okay. We'll see one by one. Just we have completed the overview. We'll go with the returns now. Okay. We have seen the returns graph earlier, right? So all, if we are putting this particular all, we will see it's a graphical representation. We will see the returns in CAGR. Returns over time. This is something that we will be looking at in an extensive manner. Okay. How is the returns of this particular fund and how is the returns of the benchmark? Okay. That is very important. So when you're looking at the particular fund, this is SBI small cap. Okay. Year till date. YTD is year till date from January 2022 till now, till yesterday. Okay. What is the return? 11.72. Okay. So last one day. Okay. Yesterday, last working day, Friday, how much was the return? Last 1 month, how much was the return? 7.7. 3 months, how much is the return? 17.5. 6 months, 19.69. 1 year, 20. Okay. Say 3 years, 34.94. For the last 3 years return. CAGR is not it's not like what to say. For 3 years, we got 34.94. It's a CAGR. On an average, every year it has given 34.94. Okay, guys, understand this. CAGR means compounded annual growth rate. If I say that this person is growing at this person's salary is growing at a 15% CAGR, it means that, okay, so last 3 years or last 5 years, this person's salary has grown like at least 15%. Then it means that some first year, last 5 years, one time it will have been 20%, sometime it will have been 12%, sometime it will have been 16%, 14%, like that. Overall, on an average, last 5 years, this person's salary has grown by 15%. So 15%, 15%, 15, 15, 15, like that. So that is what a CAGR is, compounded annual growth rate. And here, when we see this 34.94, it means that on an average, last 3 years, every year, it has grown by 34.94%. Last 5 years, 20.80. Last 7 years, 22.63. Okay, when we are looking at the mutual fund, we have to see 3, 5, 7, 10 and more. Okay, don't go and take a decision based on the 1 year return. Do not do that. Okay, never take a decision on a mutual fund based on the last 1 year return. Don't do that. 3 years, 5 years, 7 years, 10 years, and even more. Because why is that? We are not going to take our money for 10 years, 15 years, right? If you're not going to take the money for 10, 15 years, you cannot just see the last year's return and then put your money. That's not how it works. Because some of the mutual funds would have performed extremely well in the last 1 year, but would have had a drastic, performance the last 10 years. So it means that you cannot put your money on that. Okay, because 10 years long term is what you're focusing on. How this particular mutual fund is performing in the long term is your objective. Don't get tempted, because I've seen a lot of people doing this particular mistake. Seeing the last 1 year, this particular year it has grown up by 60%, but 10 years it has not performed. Doesn't matter. Okay, don't think that okay, now the upturn is coming. Nothing like that. Okay, if the even if it is performing 20%, 15%, but consistently, that is more important for us. Okay.